Okay, so here's what it comes down to. If you have rental real estate, and it doesn't matter if it's in your particular state where you reside and you self-manage those properties, or maybe you invest outside the state in which you reside and you're using a property manager to handle all of your property management activities, the question that will come up at some point in time is, hey, should I create my own property management entity? Because most of you that are watching my channel have set up entities to protect your rental real estate. You're using limited liability companies and land trusts and the things that I discuss on this channel. But one of the things that we don't touch on very often is, do you need to set up another layer there from the management side? Because we're really spend a lot of time discussing the ownership side of your rental real estate and asset protection, the benefits that come from using these entities, but not so much on the benefits of having a property management company. So this is what we want to look at. When it comes to determining whether or not you should set up a property management entity, we're going to look at the assets themselves and where they're located. So what I'm going to do is I'm going to break this down for you in two different scenarios. The first scenario we're going to talk about is when you self-manage your own real estate. And then I'm going to go into the scenario where you have out-of-state properties and you're using a professional property manager to handle those properties for you to determine whether or not having a separate entity set up to deal with the PM makes sense. Okay, so let's talk about the one where you self-manage. So in a self-management scenario, you have your assets, your real estate assets held in separate LLCs. And of course, you know that I like to use this Wyoming LLC to be the owner or blocker entity, however you want to describe it, of my red boxes. And so then I'm down here like this. So if I was the owner of these properties or owner of this structure and I'm self-managing, then oftentimes I'm going to have the LLCs themselves collecting the rent from the tenant. So all the money would be paid to those red boxes. You would never pay any money down here from the tenants to your Wyoming LLC. That would be a mistake if you attempted to do that. So in this scenario right here, assume that this individual, let's say they live in Colorado and these properties are all Colorado LLCs, then what we're going to do is we're going to have a separate bank account set up for each of those Colorado LLCs, and the funds will be collected in that LLC name. Now, why would this person consider setting up a property management entity in this context? Well, one reason why you would set up a property management entity is if you wanted to simplify things. If you didn't want to have separate bank accounts for each of these LLCs and you wanted to have one entity dealing with all your tenants and collecting all the funds, then that would make sense to set up your own property management LLC. Now, when we're doing that, setting up this property management LLC, the question's going to come up is whether or not how it should be treated for federal tax purposes. And before I go into that issue right there, I want to give you some other reasons why you may want to consider using a property management entity when you're self-managing. So number one that I already mentioned was the fact that you're collecting all the funds at the property management level, so it simplifies the bank account issue. The second reason why you would want to consider this entity rather than doing it in your own name is that if you want anonymity, right? So you set up the structure with anonymity by using these red boxes all owned by the Wyoming Limited Liability Company. So if a tenant of this first LLC right here were to look up the LLC and wonder who owns it, it's going to point them down to the Wyoming LLC. And of course, that doesn't disclose your information. But the problem is that if you're out there every day or every week talking to your tenants, stopping by, how are things going, they're going to get the sense that you own the properties. So the anonymity benefit of the Wyoming LLC is substantially diminished vis-a-vis your tenants because you're out there dealing with them in your individual capacity. So if you want to continue with this idea that I don't want my tenants to associate me as the owner of the property, even though it's in an LLC, then using a property management LLC or some type of entity, I think makes a lot of sense there. Because now when you're dealing with your tenants, if you're doing it through the LLC, you're doing it as an officer of the LLC. So the tenants see the LLC itself as the property manager, and you are just an employee in their minds of that limited liability company. And it's not you as the individual owner that's holding themselves out with the authority to manage the property. I did say I would talk about the professional management side. So if you've been waiting for that, here we go. So now if I have a structure set up like we were just doing there, where again, say I've got 3 properties out of state and they're held by my Wyoming LLC right here. Okay, brought down there, down there. Now, since these are all handled by a PM, let's say they're all in the same state. So this is, I live in Washington. My rental's here in Missouri. Okay, and I have 1 PM over here in Missouri. This guy or his company handles everything for these tenants. So all the money gets paid here. So on a monthly basis, this person, well, they're Missouri properties, maybe they're collecting $3,500 a month in rental income. Now, if you watch my other videos about bank accounts and LLCs, or what I've even touched on in this video, I talk about the property management entity, or the property manager, professional property manager, will typically issue your owner's statement and your wire to your holding company, not to the individual red boxes. Well, that's one way to do it. Another way to do this, if you're looking solely for a tax play, and that's only time you would do this, right? If you're using an out-of-state property manager, you don't need that business side that I was talking about, where you need the anonymity in dealing with your tenants. You're concerned about someone suing you. That doesn't apply to you because you're not dealing with these tenants any longer. So the only reason you would want to consider putting one of these types of structures into your plan is that you want to set up the LLC and you want it to be treated as a C Corp, because you want to reduce the income that's flowing down to you from your investment property. So now what we're going to do is, rather than having the PM pay this company, we're going to have our PM pay our management entity. So our PM collects $3,500 from the tenants, and the PM keeps $350 for their fee. So then they remit back to us $3,150. Now, my LLC will have a management agreement. My property management LLC will have a management agreement with each red box. So when we're working with our clients, we set these up for them. So we set up a management agreement, which states that this company is going to manage the property manager and still be looking over the LLC and the properties itself. So it's going to be doing additional activities there. And it wants to get paid for that. So on top of what this company's charging, I'm going to charge a surcharge of an additional 15%. So then I would take in, all right, if $3,500 was generated, take 15% of that, and then you'll move that into the corporation. So let's say that's $500. So now we're going to collect an additional we're going to collect $500 at our own property management level. And then if you look at the numbers here, $3,150 went to the entity after this party took its piece. Then we take our piece of $500, and that leaves us with $2,650, okay, left over. So that $2,650 is what your orange box will now remit to your blue box, because there's no more line here. What we have now is our property management, out-of-state property manager over here. He pays money here, you take your piece here, and then what you'll do is you remit the rest down here to your blue box. That's how you would run that. And again, why are we collecting $500 of that property management entity? Is because over the course of a year, that's going to be $6,000. That's $6,000 that doesn't flow down to you. That's $6,000 that you've now taken off your tax return. So you're increasing your losses that you can then utilize, especially if you're a real estate professional or short-term rentals, to reduce your taxable income. Maybe you're not a real estate professional or you're into short-term rentals. If these properties are all cash flow positive and even after depreciation, they're showing taxable income, well, here's a way in which for you to minimize that taxable income by using a property management entity. You know what, guys? This is why I like using LLCs and corporations and the tax code when it comes to working with real estate investors, because it gives us opportunities. You just need to know where to look to find these types of opportunities. More importantly, you need to find the right type of company who does this and understands it to help you generate more after-tax income. Because at the end of the day, it's not how much you collect, it's how much you keep from your properties. And here at Anderson, that is our stated goal for our clients. And if you'd like to get a strategy session, as I mentioned earlier, hey, in the show notes below, there is a link that you can click on. It's a free 45-minute strategy session. You'll sit down with one of our representatives here at Anderson and we'll analyze your structure and we'll tell you whether or not, hey, does it make sense for me? Okay, why not get an opinion on that? Maybe a second opinion to see if you need a property management entity in your real estate investing structure. Guys, if you liked the video, be sure to hit the like button, and you know what it comes to subscribing. Punch that button and get subscribed. Take care.